Hello everyone, welcome to another week's live. Well, they're kind of a bit fortnightly at the moment, but we're up to episode 24, the 24th live here I've done on the channel. So for those that are new here, for those that are returning, thanks for tuning in as people join. So for those that are new here, we start with a bit of a pre-show quiz. It's just a bit of fun stuff while we get people to join. So I'll get straight into it, put tonight's quiz question up. So tonight's quiz question is, what does ETF stand for? So is it A, equity traded funds, B, exchange traded funds, C, entity traded funds, or D, Ethan's Trivia Foundation? So make sure you leave your guess in the comments, whether you're on Facebook, whether you're on YouTube. Anyone can take a guess. We'll get into the answer to that soon. So for those that are new here, pretty much what I do is we start with this bit of a quiz by people join, and then we have a topic that we discuss. So tonight's topic is going to be using an accountant, so using a tax agent. So just talking about all the benefits or maybe the cons of using an accountant, what you'd need to know, what you need to potentially prepare, all that kind of stuff. And talking about things like, well, look, how do you swap accountants? Is it actually worth using an accountant? What will an accountant do? What won't an accountant do? So there's a lot of questions being floated around at this time of the year, because one big thing that is happening we have 11 more days till the end of October. And so that means we're getting very close to the due date if you lodge your tax return yourself. So if you use the MyGov system to lodge your own tax return, you are likely going to have a due date that's the end of October. So that is quickly coming up. If you use an agent, there's a very good chance you'll be eligible for the extension due date, which is the middle of May. So I believe it's the 16th of May this year. So I've had a lot of contact in the last week from people saying, look, I want to get on an agent list. I want to use an agent. I want to utilize that extended due date, especially due to whether they've got crypto gains or whether they're expecting a tax bill, therefore looking for that extended due date. So that is something to keep in mind over the next 10 days. If you are looking to use an agent, make sure you do reach out, get in touch with one, get on their list, make sure you confirm that due date, because it is slightly different for everyone depending on whether they have maybe some outstanding tax returns from the past or an outstanding debt or poor lodgement history where the ATO may not give you that extended due date. But check with an agent and then check what that due date is. So that's just something to keep in mind. So I've got a couple of guesses here for B. So two best guesses for exchange traded fund. So I will show you the answer. And you are both correct. So well done to both of you. So it is exchange traded fund. So just a little bit of fun there on ETFs. So if you're interested more about ETFs, there is a video on my channel, which is where I compare LICs, so listed investment companies, versus ETFs. So go and check that out, because they are definitely an interesting way to invest that maybe you might not need to do as much research. So the basics of them is that they are a trust that holds a range of different assets, so a range of different shares, or might be bonds, or might be property, etc. And then you're investing in there, and then you'll get the distributions back. So it's a good way to diversify your investment. So definitely an interesting thing to research. So thought I'd kick off with that. So I will remove that and we'll jump into tonight's topic, which is using an accountant. So obviously an accountant, you might think it's going to be a bit biased, but I want to give you some honest thoughts on what the benefits are of using an accountant, what an accountant does, what we won't do, and then something about how to reduce fees, or is it worth switching over, or how do you switch accountant? What's the process? What kind of stuff should you bring? So make sure you chuck any questions in the comments, because the reason why I bring this up is I've had a few conversations this week with people that have never used an accountant before. So it's the first time they've ever engaged with an accountant. So they've wanted to seek my services, but they're a little bit confused as to, well, how does it actually work? What does it mean to use an accountant? They're knowing they're wanting to use one because there might be something they've done that they're not aware of. So whether they've started a small business or whether they've got investments in crypto, and they're going, well, how does that work? Like, who does what? What do I need to do? And they get a little bit confused as to how all that's going to work. So obviously, I then have to explain, well, how that works. So I want to cover some of that. So do have a comment here. So in my opinion, it's better to take the time to understand how personal income tax works so you can get a better understanding of it all and can be self-sufficient. Probably not what an accountant would say. But I really do agree with a lot of that stuff when it comes to, I think you should have an understanding of it, and sometimes learning it yourself can be the best way to understand. Now, whether that means you go through that whole process of lodging yourself or not, that's obviously debate and depends on your own knowledge. But I think having some understanding of how income tax works is really important. So by having that understanding, one, which I've talked about before in here, it's one going to allow you to reduce fees, which I'll get into soon, but it's also going to allow you to make sure that the information that you're feeding to the accountant, what you're getting back is correct. So you're going to have some idea. Whereas if you're just going to an accountant with no idea, how are you going to know that they are on the right track? You're not expected to have as much knowledge of them, but by you having some knowledge, it definitely helps to make sure that you are being guided down the right path rather than being steered down the wrong one. So yeah, I think across anything in finances, it never hurts to educate yourself, especially something like tax, because tax is going to be around. It's not going anywhere. You know, the old saying, what's guaranteed in life, death and taxes. So it's not going anywhere. So you're likely, if you're starting in employment at 15 years old, you're probably going to be lodging a tax return for the next 50, 55 years. So it's a skill that if I suppose you educate yourself on a bit, it's probably not going to go to waste because it's something you will use every year. So that's an interesting point. So using an accountant, it's not all about everyone needs to use an accountant. I've got videos on my channel where I talk about should you use an accountant. So go and watch one of them because it's definitely not, I don't recommend everyone to use an accountant. There's definitely times where I think people could lodge themselves, and there's definitely times where I think people should have engaged an accountant. So what I'll talk about here is what will an accountant do? So obviously if you come to an accountant, come to a tax agent to get your tax return done, obviously they're going to produce the tax return and they're going to lodge it. Now, beyond that, well, it's going to depend on what kind of scope of works you got, obviously what's involved. So the more complex, if you've got a business, there's obviously going to be a lot more things involved. You might have payroll, you might have bookkeeping, you might have other obligations, GST, BAS, etc. But for the general individual tax return, the accountant's likely going to prepare your tax return and lodge that tax return. They'll typically prepare the tax return, they'll send it to you to sign, or if you're lucky enough that you're somewhere where you can meet in person at the moment, you'll sign it, they'll then lodge that with the ATO. The ATO will process it, you'll get your refund, or you get your notice of assessment that will show you your amount payable. That's the basics of it. What will the accountant do, though, when it comes to producing that tax return? It's going to depend what's involved in it. So if it's just, you just work for someone, you've got a salary or wage, and you might have a little bit of interest income, maybe some dividends, a lot of that will likely be pre-filled from the ATO. So the accountant will get what's called a pre-filling report, and we are able to import that into a tax return or enter it into the tax return, depending on the software. And then we work with you to make sure that is correct as a starting point. So I'll be filling the gaps. Okay, is this the only places you've worked? Do you have any other employment income? Are these your bank accounts that have got interest? Do you have any other dividends? We start going through, okay, what income items do you have? Then going through, obviously, deductions. So, have you used your car for work? Do you have workload uniform? Have you used your phone, internet, all those types of things? And obviously, a good accountant will make sure they're asking questions that are relevant to your occupation. So a lot of people ask, well, what do I need to provide you? So until I know your occupation, I can't really start to adjust that advice specifically for you. So it's asking those questions. Okay, well, if you're a teacher, do you have union fees? Have you paid for resources for your classroom? Do you have any memberships? Have you had to go to training? So kind of customizing that based on that. So a good accountant will ask you questions. That's a good thing. That's what an accountant will do. Now, what it depends on is then, well, it depends on what format you then provide your information in. So I get some clients that will come to me in person and they'll just have some receipts. And I sit there and I add up the receipts, I verify the date's correct, I put the amount in, I put that into the tax return. I got other clients that will present that in a spreadsheet. I've got other clients that will have it written down on a bit of paper. I've got clients that will fill out, I produce checklists that you can access them on my website. So I've got checklists for people to be able to do the tax return with. So they'll fill that checklist out and then I'll look at it and make sure the figures make sense. So that's what a good accountant should be doing, is going, okay, well, you are a retail assistant. It's unlikely that you're going to be using your phone a lot for work. So therefore, I might ask that question. Or the other way, okay, you're a tradie, but you've got nothing for uniform. Okay, well, I'll ask that question. Did you have to buy boots, or did you buy protective clothing or tools? So that's what a good accountant should be asking those questions. But how you produce that to them is going to depend on which accounting you're using, etc. Like I said, I try and make the process easy for clients because I want them to produce it in a format that is easiest for them. But I suppose what people are more interested in, what won't an accountant do? And I think accountants will do probably anything when it comes to tax, but there may be a price that comes with that. So for instance, okay, you've got crypto and someone will come to me, and this is happening quite a lot lately, and go, well, what do you do? What do I do? So a lot of the time I go back and say, well, if you can produce a report from a crypto tax software, it's going to significantly reduce your fees. But will an accountant work out your capital gains for you? Well, again, it's going to depend on what is agreed in your engagement, what's agreed, what is their side of the role, what's your side of the role. And a lot of that is going to come down to, well, how much are you willing to pay? So, or what is the competency of an accountant? So I'm hearing a lot of accountants go, well, I don't deal with crypto. Go to someone that does, or go to someone that will calculate it for it and then come back to me. So that's another thing that I'm hearing lately. So it's just going to depend on what you want the accountant to do. They'll probably do whatever you want to do. Just be aware that there's likely going to be more fees into that. What an accountant won't do is things like potentially financial advice. So, oh, should I invest in this, or should I put money into super? So as an accountant, we're not licensed to do that as a basic accountant. There may be some accountants that double up as financial planners, but that's a different side. That's a different role. So a basic accountant can't give you financial advice. It's just, it goes against what we're allowed to do. So that's something an accountant won't do. And obviously that's going to stretch into, I suppose you want to make sure your accountant is only giving you advice about what they're qualified in. So likely going to be tax and accounting, rather than them trying to give you too much advice on mortgage broking or legal stuff or financial planning, things that they're not qualified in. As I said, you could have people that are dual qualified across both things, but that's just something to keep in mind. But pretty much what an accountant won't do, well, is things that you haven't paid them for. That's typically what it's going to be. So you really want to clarify with your accountant early on who's doing what, make that clear, and then you're not going to have issues. And that'll lead really well into the other thing I want to discuss is, well, how can you reduce fees? So obviously, the less work the accountant does, typically, the less fees you're going to get charged. That's the basics of it. If you get them to do more work, the fees are going to go up. It's like any kind of service across any industry. The more someone does for you, the more a product does for you, etc., likely the higher the cost, the higher the fees. It's pretty basic. Obviously, it's different with professional services as to what your fee structure is going to be. So you're going to have some accountants that are going to charge you by the hour. You're going to have others like me that is charged a fixed rate. Or you could end up with a bit of a hybrid situation where you've got some services a fixed fee, some are going to be hourly rate, as long as you have that conversation. But how can you reduce that? Well, obviously, the more you can do, the better prepared you can be, is going to put you in a better chance to reduce fees. So obviously, the more organized you are, if you go to an accountant and you drop a whole shoebox of receipts and go, oh, here, I want to do my tax return, they're likely going to go, you know what, we're going to have to sort through that. It's going to take us a couple hours of work, therefore your fees are going to be high. You go to an account and go, oh, I haven't calculated anything for crypto. I've got 10,000 transactions. I don't know how to work it out. Again, if you go to them and you want them to do it, it's going to cost you more. If you can go the other way and go, oh, I'm going to use some software that they've recommended, I'm going to do 90% of the work, well, that's 90% less they have to do, therefore should reduce your fees significantly. But the other big thing is having that understanding of how your accountant charges, and this goes beyond just accounting. It doesn't matter what service you're getting. Having an understanding of how they charge will definitely reduce your fees, because you can pick and choose. So if you're going to a builder, you want to make sure you understand, well, is this a fixed quote? Is it just for this? Add-ons extra? So by any service that you're doing, by having a thorough understanding of, look, what are you actually paying for? How does that work? How much is that going to cost you, etc., is probably the best way to do it. So a few other things to touch on, and obviously if you've got questions, make sure you drop them in the comments of, if you're using accounting, people go, well, how easy is it easy to switch accountants? Which, yes, it is. Like, I've picked up a handful of new clients just today. So it is really easy. I collect some details, I add them onto the ATO system. Depending on their situation, I may need to send off a letter to their previous accountant. But the actual switching process is pretty easy, no matter what type of taxpayer you are. I think people get stressed. They go, oh, mine's complicated, or my accountant has access to information, or I've heard some crazy stories of people going, oh, yeah, but my old account, they can access my income straight away. It's like, well, if it's uploaded to the ATO system, whoever your tax agent can access that. It doesn't just mean that your old account had some special system. We all have access to that. We all have access to the same ATO information. Obviously, people that have been with the same account for a while think that, oh, they know all my history, which that may be true. You may have built that connection. There's nothing to say you have to switch accountants. But the actual switching process shouldn't be overly difficult for the client. If it is difficult for the client, then maybe you shouldn't be switching to that accountant. The onus should be on the accountant, the tax agent, to do a lot of the heavy lifting to bring in a new client and onboard them. So that's my opinion on it. And then obviously, like we said, the other thing I want to talk about is, what information to present. And it's all about speaking to your accountant, finding out what they want from you, because that's going to be the main thing. Hopefully you get an accountant, like me, that's going to go, you know what, you present it in a way that works best for you. And then they work with you to then go, okay, next year, maybe do this, tweak this, so that it makes it easier for both parties. Because again, the easier, the quicker, the more, more time efficient people can be, typically the cheaper it is, the more fees come down, but the service level should stay the same. So at the end of the day, you'd rather be paying your accountant $200 for advice on saving tax than $200 for them to sort through a pile of receipts. So that's the basics of it. So Hope that's been interesting to people. I have got a few questions that were asked during the week, so I will jump into them. If anyone does have any questions, make sure you do leave them in the comments, and I'll happily answer them. So the first one I got was, what's the best way to be organized and what programs should you be utilized? So I know this one come from a business owner, so I'll tackle it from that point of view, but I will talk a little bit about, I suppose, non-business owners. But I guess there's kind of two aspects to accounting and to bookkeeping and to tax, I suppose, when it comes to record keeping. So you've got, obviously you need to be organized from a numbers point of view. You need to have some systems so you're calculating your income and expenses at a real basic level. That's what it is. We can go further than that if we want to do reporting on different aspects of your business, or we want to run a balance sheet, etc. Depends on the size of your business, what type of business, industry, etc. But to do that side of things, well, that's going to depend on probably size, but typically you're going to be looking at software. So something like Xero, which is always my recommendation when it comes to accounting software. You could be looking at a spreadsheet. So I've got plenty of people that run really advanced spreadsheets. We've got ones that run really basic spreadsheets. Again, a system works. I've got people that literally will write it down and that's it. They write down a daily journal or whatever it is of their income and expenses. They total them up, they put them on a bit of paper and they give that to me. Again, that works. Whatever system works for you depending on the size of your business, and being willing to adapt and change as your business might grow. So if your business gets busier, maybe you need a more automated system. It's just something for you to consider. And then I suppose the other side of being organized is, well, making sure you're then having all the source documentation saved that you're going to need if you get an audit. So have you got all your receipts saved, whether it's in a software such as HubDoc, which integrates with Xero. You've got things like Receipt Bank, which is now called Dexter, I believe, again, that will digitally save receipts and store them against transactions. Or do you run a Google Drive? So I've got clients that run Google Drives. They save copies of all their receipts, their invoices. They've invited me into that file, and therefore I can access that, and that works really well for both parties because they just upload it straight into there. I can go in there and I can find the receipts. If something's missing, we're just dealing with the exceptions. So I think that's a few different softwares that you could use. Of, accounting software of Xero, you might be using something like QuickBooks, MyOb, or then you can use some of those receipt storing tools. So we've got Receipt Bank, Dext, HubDoc, Google Drive, OneDrive, any of those kind of digital storage things I think are great, Dropbox. So any kind of cloud software is great because you can access it. If you've got your phone, if you've got your laptop, got your computer, you're on the run, that's great. You can send things as you go. So any of that, but the more systems you can put in place, doesn't necessarily have to be expensive programs. A lot of these things you can get quite cheap. And if you're running any type of serious business, let's look at, okay, if we can save ourselves an hour a month, what is an hour worth to you as a business owner? And obviously, now to approach that from an individual point of view, well, again, you're wanting to look at, obviously, the record keeping side. Have you got track of your deductions in particular? If you're using income, like if you've got income, are we looking at crypto tax software, share tracking software such as ShareSite? And then for deductions, well, again, you could use one of those cloud storage things. The ATO have an app where you can store deductions. I don't know if you can take photos. I believe you can. And again, you can categorize those. You're keeping track of things and you're less likely to lose things, therefore less likely to miss out on a deduction. So I think that's a really, really interesting way to do. So I've got, how do I get my taxable income right down this year? I'm in the top tier tax bracket. So this is an interesting question. So it's going to depend on what type of taxpayer you are. If you're a business owner, there's a lot of other things that could play into this. And depends what type of structure you're using. And there might be some more strategies. So that's probably a more advanced topic. It's something I will talk about in the channel more about, strategies to reduce income as a business owner. But I'll tackle this more from an individual taxpayer. So if you're an individual taxpayer and you're working and you've got a job and you're on $250,000 a year, so you're going to be on the top tier tax bracket. Well, first of all, you want to ask yourself that question, do you need to get your income down? Does that make sense? What benefit are you going to have in actually reducing your income? Because if you're just reducing your income to save tax, so you're working less hours, that doesn't make sense. I think people understand that and go, well, I'm in the top tax bracket. I don't want to just work. The real simple answer is we'll earn less money. You earn less money and you'll pay less tax. That's the reality of it. So that 250 grand job, if you only earn 150 grand more, of course you'll pay less tax. But that's probably not the answer people are hoping for. So then you're going to have to look at, okay, well, what could I do? Now, people will talk about negative gearing. They might have a property that's negative geared and therefore it reduces some of their taxable income and saves them some money. Whether that's really the right strategy, go and watch the video I've done talking about properties and negative gearing and whether it's really good. I did it a couple of weeks ago. Go and watch that. The other option, I suppose, that if you're just, you can have more deductions. But again, if you're spending $1 just to save 45 cents, that doesn't really make sense. So it's obviously going to depend. If you've got legitimate work deductions, well, bringing them forward into that financial year makes sense. You can make a donation to charity, which is going to reduce your taxable income, but that will obviously put you in a worse off position, because if you donate $1 to charity, you're only going to save 45 cents. Now, obviously, you're donating charity, so that should be a good thing. And if that's what you want to do, that's great. But if you're doing it purely to save tax, that, again, doesn't make sense. The one option a lot of people could investigate is super contributions. So could you put extra concessional contributions into super? That's definitely something you've got to do your own research on whether that is right for you, because obviously, depending on your age, money could be locked away for a long time. And you need to take into account, well, how much has already been contributed on your behalf. So you don't want to breach the concessional contribution cap. So I believe that's at 25,000 at the moment for a year. And I'm going to talk about that because one of the other questions I've got leads into that. But one thing to keep in mind with that is that, if your employer is already paying super contributions on your behalf at the 10% rate, if you're on 250 grand, they may have already maxed that out. So that might not even be an option. So, but that is something that quite often people will look at as super contributions, because they think, well, if I'm going to reduce my taxable income, save some tax, then really I'm still keeping that money in the long term because it's going into my super fund. Some people are more comfortable with that. So that does lead well into one of the other questions I got, and I can see this question in the comments. I'll get to that in a second. So how do 5-year backdated concessional super contributions work? So probably leads quite well into that. So we do have I believe it coming in the 1920 year. So we have carried forward concessional contributions. So it's pretty much where if you haven't utilized your concessional contributions, so like I said, there's that cap of 25 grand, I believe it is at the moment. If you haven't used that in 1 year, so say last year you only had 15,000 going to super, then that unused cap could roll forward and you could use that in a future year. So you could then put 35,000 in the next year and claim that. So it is something that could be used, and that can be rolled forward for up to 5 years. So if you've underutilized it for 5 years, you potentially could up that what you're able to put in future years. So it can work quite well for a business owner that has a poor year, they don't put anything into super, and then the next year they have a really good year and they might put 50,000 in and utilize that. So it definitely can be a position that you can put yourself in, depending on, that's where a bit of planning on future income, which I know can be a little bit hard to do at times, but having a good idea of, what's my taxable income likely to be next year. So for instance, for me, I'm trying to grow my business. So I'm obviously hoping my taxable income keeps increasing in future years. So that's obviously something I could keep in mind, that in future years, I may have the ability to put more money into super if that fitted what I wanted to do. So it's definitely a strategy to people consider. It's definitely worth investigating, especially if you haven't put large amounts in previous years, and maybe you have suddenly got a higher taxable income and higher cash flow, because obviously, if you're going to be putting money into super and you're 25 years old, it's going to be a long time before you're potentially going to be able to access that. So again, really do your own research into those areas. Speak to a financial planner if you're a bit unsure about it, to get that advice or whether it's right for you. And then you can approach an accountant and go, will this work? This is what I want to do. How is that going to impact me tax-wise? So it's definitely something to consider. But yeah, that's the basics of how that works. So did have one comment come through of what is the better ways to keep up with changes in tax laws? So here in Australia, one of the major ways to keep up with that is budget night. So quite often at budget night, that's when a lot of tax changes will get announced. So you have a government that will go, this is what we're wanting to do. This is what we're proposing. Obviously, there's normally things that need to go through Parliament to get those things ticked off. But that's the basics of it. On budget night, normally they'll come out and go, yep, these are going to be the tax changes we're going to make. This is what will be needing to be done before they get, signed into legislation. But that's the basic, I'd say, the biggest time of the year where we have the most tax changes. Throughout the year, there's a lot of things obviously going on, because a lot of these schemes that they try and bring in may take time to get approved, etc. But I suppose you have that big event of budget night, and then I suppose you could keep track of those different things, those different schemes that might get announced, and follow those through. So the ATO are pretty good with their website at keeping things up to date. Their search engine's pretty good on there to search things. And then obviously it depends how in-depth you want to get. Obviously if you hear of something, go and check with an accountant, go and check with the ATO, go and check with a professional body on whether that actually is happening, because there's a lot of false things that get thrown around. That's getting scrapped, or that's happening, or we're getting a tax cut, or we're getting an offset. Go and watch my video I did where I talked about the $1,080 tax, or are you actually going to get an extra $1,000 back this year? Like, some of those schemes can get run away with the media, and the headlines you read are very misleading. So you don't want to rely on a media headline to explain a tax change. You probably also don't want to rely on a government headline to explain a tax change. You want to rely on an ATO maybe explanation rather than a Liberal Party or a Labor Party trying to go, yeah, this is the change we brought in, that's great. And then obviously you've got budgets for state government. So again, they may make changes to some state taxes. Again, all of these methods, I think the biggest thing on keeping up with tax changes is making sure you verify what you hear. Because any big tax change, there will be articles about it out there, whether it's from accountants, whether it's from the ATO, whether it's from political parties, whether it's from media. But again, by making sure you're verifying your information is probably the best way to keep up with tax changes, is making sure they're actually a change and being really aware of those dates that things get signed into fact. So, if there's a change if we change the concessional cap, for instance, they go, okay, the concessional cap's changing. Well, what date does that change happen from? To make sure you don't get called out and go, I'm going to go do this, and you do it at the wrong time, or you don't miss something. So obviously something that's been a lot lately is the instant asset write-off stuff. So then that's been changing. But again, you don't want to miss it and go, okay, well, I can instantly write off an asset, and then you go, oh, that ended it last week. So again, by keeping yourself on top of these things and obviously speaking to professionals or doing your research on the ATO website. And look, things change, and look, there's times where things change and I'm not aware of it and I hear about it, because something can change and the client rings me 2 hours later and they ask me about it. There's been some changes on how the tax treatment of some of these grants that have been given out obviously due to the pandemic. So that's something that's been evolving and was very difficult to keep up with. We'd have a press conference from the Prime Minister that would go, this is a scheme we're announcing. And within an hour, I'd be getting calls and it wasn't actually in legislation, except for there was nothing in writing to back that up. So, yeah, changes can be crazy, especially over the last couple of years. But the basics is I would start with budget night and then branch out from there, depending on how in-depth you want to get with tax laws. So, hope tonight's been interesting. If anyone does have any questions, drop them here while I wrap things up. So, a little about what's going on at the moment. I'm trying to do these lives probably fortnightly. I'm not quite sure whether they're getting the traction I'm wanting at the moment. So I'm not sure how that's going to work. I'm trying to think of ways to spice them up. And, I want to keep giving value back to people. But if people are engaging with that, then maybe they're not finding them value. So, then I will look to do more normal videos. I am trying to do at least 2 videos a week, combination of lives and normal videos. So we've got that. I did a video last Sunday that come out talking about my wedding that's coming up. Bit of a different topic. But again, trying to focus on trying to add a little bit of variety to the channel, but talking about money, things of different aspects in life, because I know not everyone's invested in crypto. I know everyone's not interested in investing. So trying to cover a few different things. So as always, if people do have topics they do want me to cover, make sure you drop a comment and I will get onto them, or send me a message on Instagram or on Twitter or anywhere that you can get in touch with me and I can cover that. So go on, good information. Thank you. And I hope everyone's enjoyed the night, and I will catch you again. Make sure you stick around. Sunday night, I'll be having a video, hopefully go up about some more crypto tax topics. So for those that are interested, make sure you check that one out. Appreciate the support, and I'll talk to you again soon.